Now, less than an hour for the budget speech to begin. Great set of guests to try and analyze what should you keenly watch out for. We are counting down to the big R. Mihir Vora, CIO Trust Mutual Fund. Andrew Holland of Avendus Capital Public Markets with us on the show. Gentlemen, both of you, thanks so much for taking the time out. Mihir, I'll start with you first. What is it that you believe would be the cornerstone announcement in this budget? Would it be around the deficit glide path, which probably is a given, or could they better it? Or could it be something around capex announcements or consumption?
Hi, good morning. See, the good thing is that the finance minister has enough levers to tweak around the numbers if she wants to, focus on any priority. For example, there is enough if you want to increase capex. There is enough leeway available if you want to increase the rural support, because there has been a little bit of acknowledgement of the fact that the rural economy recovery has not been as great. And we have also seen some states going in for measures to help the rural population. So as I said, there will be different focus areas. The economic survey also provides a few pointers. As you rightly mentioned, capex is important, but I think the economic survey kind of alluded to the fact that the government has done its bit, and it's now for the private sector to start chipping in as far as the capex is concerned and job creation is concerned. So I'm hoping that there might be some encouraging signals for the private sector to further, create more jobs and put in money into the industrialization of the country, as we know, including Atmanirbhar, etc. So that's one focus area. Second is the rural. I think we may see some more spending, not necessarily as direct subsidies, but on areas like rural housing, on areas like minimum job guarantees, etc. That is possible. And the good thing is, as I said, there is the RBI dividend as a leeway. Tax collections are better than expected. Nominal GDP growth is likely to be higher than what they estimated in the interim budget. So there are lots of places where there is additional resources available to juggle these different priorities.
Okay.
Andrew also with us this morning. Andrew Holland of Avendus Capital. Very good morning to you, Andrew. And on the scale of anticipation, are you hot, cold, or just right, medium? What are you expecting out of the budget in terms of anything that is really going to move the marker, or like we've been saying this morning, more of the same? And do you think there will be a resurgence in those typical budget stocks that people have really not been looking at?
So, Tamana, I agree with you. With your more of the same. That's really what the market wants. And therefore, the kind of themes that we talked about previously, where it's hospitality, premiumization of beverages, infrastructure spending, renewable energy, all of those, defense sectors will all continue to do well. But, you've got to ask yourself, is it priced in? And, if it's more of the same, you might have, a bit of a rally if there's no tax changes. But given RBI noises, SEBI noises, and the economic survey, either they can talk the problem or they do something about it. It feels to me as though they might want to do something about it in terms of moving money back to the banks, because you can't fund all the expenditure. And you're talking about private capex picking up. You've got to have the banking sector in a position to be able to do that. And if they're finding that their pressure on margins is there because they can't get enough deposits, it's going to slow down the growth of the economy. So that would be the negative, I think, if they follow through on their words.
Okay. By the way, news flashes about Asian Paints raising prices again. So just in between this macro conversation, keep that in mind. Second price hike in probably 15, 20 days. So the paint companies are certainly going out there. Andrew, so if it's more of the same, would you be happy with all the measures announced in the interim budget? Or what are the changes that you're watching out for? Because between the interim budget and this budget, there's this RBI bonanza that has come the government's way. They'll do something with that money.
True, and I think that there's, they can increase the capex themselves, which would be fine. They can put more towards, rural expenditure. I think, housing would be an area which I think they should focus in on, because it has multiplier effects across many different industries in that respect. So that would be where I'd see some incremental kind of expenditure from the government. But, fiscally prudent is what they have to be as well. So I don't think they want to kind of throw everything into expenditure. And I think what they really need to kind of focus in on is getting the rural economy going. I think housing is going to be one of it. But, yes, it can increase the capex, but I don't think it has that material impact on the markets overall. I think that the problem for the market at the moment is priced in everything apart from any tax changes.
Could be a negative. Okay, interesting. Mihir, some numbers here. Receipts versus expenditure, right? So, and let me try and focus on receipts. The indirect tax collections have been very robust thus far. But if indeed there is a cool off in corporate activity and the tax collections go down over the course of the year, what is it that the government can do on the receipts side to try and shore this up? Because we know that this government is not necessarily very keen on divesting state-owned enterprises, maybe individual assets, but not enterprises. Where do you think the numbers will be watched out for on the receipts side?
See, first of all, the probability of corporate tax collections not meeting the full year budget target is quite low, I would say. Couple of reasons. One is that in the interim budget, they've only assumed about 10% nominal GDP growth rate. We are already, closer to 11.5. So there is, an upside potential there. Second is that corporate tax collections are no longer the largest of direct taxes anymore. Personal taxes are actually more than income tax. Personal income taxes are more than the corporate tax collections, and those tend to be less cyclical than the corporate taxes. So I think even if corporate taxes were to not grow at a rate assumed in the interim budget, I think there is enough leeway on that. So I would not be too worried on that front.
Mihir, just talking about the corporate tax, one of the key demands coming in constantly has been to retain the corporate tax rates at 15%. And the counter in that debate has been that have corporates actually created jobs, increased manufacturing, increased capex with all of that lower tax rate given, or did they use it to line up profitability? And that, of course, is a broader debate. But speaking about that, do you think that on the corporate side, what would you be looking at in terms of that boost to capex, private capex and manufacturing, and how key does that become?
So I think the economic survey gives some answers. It clearly mentions that the government has done a lot of heavy lifting for capex in the last 3 years, and the private sector now does need to chip in. And as you rightly mentioned, the economic survey also points to the fact that corporate profitability has gone up substantially, but most of the investments are lagging, so to say. So I think from the corporate point of view, two things need to be done, and the first one is also one part of the economic survey which I read, is that while we have improved the ease of doing business versus our own history, there is a lot that needs to be done in terms of absolute ease of doing business. So whether it's in terms of approvals or tax confusions, etc., businesses still need to feel more confident about how they are going to go about doing business in India. So I think tax is not going to be a tool to encourage or goad the business investments anymore, because we are already at quite reasonable levels. There is no space for cutting taxes anymore. However, one should expect more on the PLI, because the production link incentive scheme has been successful. They tried it in a few sectors with good success, and the government has been quite open-ended about it and open-minded about it, to the extent that more and more sectors are included in the PLI schemes. The economic survey points to the fact that we need to create 80 lakh jobs a year from now till the next 10, 15 years, given our demographics, etc. And manufacturing can be the only way to go. Manufacturing, construction, real estate, and labor-intensive industries are the only way we can create 80 lakh jobs. It can't happen in services alone. So to that extent, I would expect more trust and more focus on PLI schemes and the Make in India or Atmanirbharta theme.
I'm going to depart for a second away from the budget, even though we're 45 minutes out of the announcement. And Andrew, I want to come to you first on this, and then Mihir, I'll get your view as well on what we've been seeing so far on Q1. Because after the budget excitement is done and dusted, we'll see a lot of plans for the next several years, some allocations, tinkering here and there. What we're left with in terms of solid factual evidence of what's happening with profitability are the numbers. Andrew, would it be fair to say that Q1 so far, apart from a few exceptions, and I think IT is the outlier, has not been the best performing or on par with Street's expectations?
I would agree. I mean, it's been lackluster. If anything, I'm seeing earnings, below expectations, below the market expectations, and therefore you're seeing some cut in earnings. So let's just take the budget out of the picture. Whether it goes up or down is immaterial for afterwards. We go back to the fundamentals, and the earnings is not supporting the market valuations at the moment. And our view has been that we'll probably see something like 15% earnings growth this year, and maybe the market would move up in line with that. The market is already up 10% this year, so you've really got little to play for in the next 6 months, unless two things happen. One, the government increases the capex and those orders go up very quickly, and or private capex picks up, because that does have a multiplier effect, and that would probably mean that earnings can be upgraded in the first part of 2025, and that would keep the market going towards the second half of the year. But without that, there's very little to get you excited about the market in terms of earnings growth given the first quarter so far.
Mihir, same question to you. All said and done, at the end of the day, Q1 has been a little lackluster, to quote Andrew.
Yes, even in IT, I would say that while there have been some upgrades in some of the guidances, we're still talking about, at least as far as the large companies are concerned, we're still talking about very low single-digit kind of growth, at least for a year or so. So it's not that exciting. Banks have faced some pressure on deposit growth, so that might actually end up curtailing the overall lending growth also. So those are some of the flags that probably the finance minister would have in mind when presenting the budget. You might see something for the banking system also, because deposit growth does seem to be a bit of a struggle.
I wonder what can be done to shore up deposit growth, and comes back to the question that I asked Radhika as well. Radhika Gupta, when the governor says that money is going, instead of going to the banks, is going to mutual fund industry. Mihir, that's good for you, but is it good for the banks? So when you say that something could be done to shore up deposit growth, like what? I mean, increasing interest rates could be one measure, but that's in the realm of the RBI.
Well, you could have for the middle class, hike in the slab rates, hike in the exemption levels of income. Plus, you used to have, we also have the interest ceiling, maximum ceiling up to which you can have interest or rather tax breaks on your interest income. So those kind of tweaks can definitely be done. But overall, the mutual fund industry, while it's been growing, I think it's more a function of percentage of household savings rather than mutual fund versus bank. We must also realize that a lot of savings are actually going to physical assets. So I don't think it's mutual funds versus banks. It's physical assets versus financial savings. That's the debate.
Drew, now just trying to talk about what could find a sure shot mention. We know defense, railways, power, for example, will certainly find a mention, because these are sectors that the government has a focus on for a number of years. Let me start with power. Where do you think, or what's the quantum of thrust do you think? Could there be a surprise there, or is it present continuous? And will the markets have a positive takeaway from there? Because it's a very wide ecosystem of stocks which are listed, which could benefit or not from whatever is announced.
So the question is for...
Okay, yeah, Mihir, you can start, then I'll get Andrew's view. I'll ask this to Andrew, but Mihir, maybe you can start first.
Sure. So see, as far as the power sector is concerned, we have the PSUs and we have the private sector. As far as the transmission, distribution, generation ecosystem is concerned, most of it is in the central or state government ambit. So those outfits are anyway spending the way the government expects them to. So it's not a part of the budget really. The budget probably has more impact on areas like defense, railway, where there is a direct allocation, roads, etc., for example, where there's a direct allocation. So on the power sector per se, the influence that the government is having will be more on the policy front, and for which we've seen various measures for renewables. We have seen adequate incentives for even local manufacturing of a lot of components, etc. And the ordering in the power sector has picked up both in the private sector as well as the public sector space. So I don't expect specific capex linked announcements for power. It's more on the policy front that we can expect something.
Okay, Andrew. Same question, is power the space that you watch out for the most, and within that ecosystem, therefore, what do you like, or are you expecting better announcements in maybe defense, railways, what have you?
No, I'm really not expecting anything more from what the interim budget said. I mean, there might be tweaks here and there. I would agree it's more of a policy in terms of power, of how they kind of give orders. I think there's still a deficit, so maybe those companies involved in kind of providing power from wind might be kind of the areas that you get more focus on, more incentives for that to happen going forward to help with that deficit. So that's what I'd expect to see. But I'm really not for the interim budget. I don't see why they need to do so much more. We're all happy with that interim budget. I think the question will be how much more towards rural spending, where they're doing it. If it's towards housing, that's great. Maybe one sector which they'll look at a little more closely is the hospitality sector, because again, it's a big, in terms of employment, it's a big area. So maybe they could do something for the hotel industry as well, to get that picking up. It's going very well, but to continue that kind of move towards more employment in the services sector as well.
Look at Easy Trip this morning, about 7% up. Since you spoke about hospitality, Andrew, Indian Hotels was the big winner yesterday. Chalet seeing a bit of profit booking, but let's quickly see what's happening with Indian Hotels as well. That was the big winner. A bit of profit booking there as well. So yeah, you could see impetus for there. But I just want to take a second to talk about Borosil Renewables and what's happening there. 11% up, has been on a steady stream run since this morning, and no specific news. So perhaps a clear budget play over there for a boost to alternate energy. Even an Adani Green running up. Suzlon, of course, fantastic numbers, but nevertheless also a big push there. Mihir, this is now a longer term theme, right? And we'll be talking about this next budget also, possibly at the budget after, because alternate energy is a stated goal and it takes time to really push through. But what would be the top bets in this space if investors want to ride that wave?
Renewables is a vast area, and while we have huge amount of investments which has been committed by the private sector in solar, in wind. Of course, nuclear is also coming up, as a thrust area. But generation is only a small part of the game. Equal amount of investments need to go into the transmission and distribution system, especially the transmission systems, because as we know, the renewables are not uniform in terms of their availability throughout the day. So it needs a different set of transmission systems. It needs power storage as a system. So I could expect something on the say storage system incentives, something on battery storage, etc. If at all, we have to come to this situation for renewables. So the way battery prices are coming down globally, say 1 or 2 years ago, very short time ago, I would say, even a couple of years ago, it was perceived that battery storage can be very expensive and it's not viable as a mass storage device. But the way battery prices have come down in the last few months, it's now becoming increasingly possible that even large-scale battery deployments can be done for the buffering of renewable energy, so to say, storage of renewable energy, which is not uniform throughout the day. So I think you might see some announcements on those, say PLI schemes, etc., more for battery manufacturing, etc. So those kind of incentives are required. As far as the T&D, the transmission and distribution space is concerned, we have seen the state and the central transmission utilities announce projects in the HVDC space. So those are anyway out there getting bid out, and we are seeing it in the order book of a lot of companies. So that theme is already running, and I think the pace at which it is happening is also adequate. But on the battery storage part, you can expect, or storage in general, you can expect some announcements.
Hi, it's also Samina joining in. A more broader based question. What do you think the budget could do to trigger the next leg of rally on D Street?
With taxes, that's the only thing. I think everything else has been played into the market.
Right. Mihir, what about you? What are your thoughts? What could the budget do to trigger the next run-up on D Street? We're already up 5% this month and we look expensive. Anything that the budget could have that could help the next leg?
Well, there could be some relief for the middle class, the tax-paying middle class, because there is a feeling that the current slabs, etc., are kind of out of date, and given inflation, etc., you might want to remove, at least move the exemption slabs up so that it increases disposable income, and you can have benefits in the discretionary space, in the housing space, as the white-collar tax-paying population gets more disposable income. So that's one definite possibility, or not possibility, hope, which can actually improve the sentiments. And of course, there's been a lot of speculation on capital gains tax tweaking around the duration or the rate of capital gains. So if there is no negative on that, that can be a good news. So no bad news can also be good news.
No bad news can also be good news. Andrew, what do you think the budget should not do or disturb at this current juncture we are at? There are a whole bunch of wish lists, I know, from various sectors, just like it is every year, right? But what do you think is non-negotiable in that sense?
Well, from a market perspective, non-negotiable is increasing capital gains tax, and both long-term and short-term. That's non-negotiable for the market. So that's the one area which we all worry about, right? And in which the market's worrying about. As I said, I think everything else that you could ask for in terms of the interim budget, and now you're going to get more money towards rural expenditure, is a nice kind of Goldilocks scenario for the market to ponder on, and that's why you've seen a large move, since the elections on the back of this thinking that fiscally prudent, spending money on capex, getting the rural economy going. You can't ask for a better mix, right? It's a nice cocktail to drink.
Andrew, Mihir, always great talking to both of you. Thank you very much for joining us and helping us understand what those expectations are from the much anticipated budget.